Everybody, welcome to another trade recap. Today's trade recap is actually, currently it's Saturday, but it was for Friday, January 3rd. Um yeah, so let's get straight into it, right? Um coming into the market, right? So again, this is for Friday, January 3rd. um 4 hour we had these 4 hour highs, 4 hour lows. That was it. Scale down to 1 hour. At the time that I hopped onto the market, right, which was around like around 9ish, yeah, before this big move up. Um, it was Eastern time, so I had these 1 hour lows, right. I marked this one just because these were all like literally all like easy liquidity grab. So I just marked the lowest one out of all these, and then we had these 1 hour highs at the time, and then this 1 hour high. Let me make a little closer. There we go. 1 hour high. And along with these 1 hour lows as well. Right. So that was it for our high time frame confluences, right? It's got onto the 5 minute. What are we waiting for? Literally sweep of liquidity and then a reversal. So in this case, it was like I said, I hopped into the market around 9, so it was like around right here. This move hadn't been made yet. And then market open, we got that sweep of liquidity to the upside. And again, even though it was pre-market, there was no move made to the downside. If there was like a bearish candle here, I would have literally completely disregarded all these liquidities right here, because again, that move had already been made and it already had made its move down, right? In this case, it hadn't. It was all just straight bullish action. Jesus, bullish price action, and we didn't get a bearish candle till 9:45, right? So 9:45, that candle closed like around 9:50, which was like right here, right? So I mean, we had this imbalance, right? Tap into it. Literally, we had a break of structure again. Oh Jesus, let me take this out. We had a break of structure, right? Confirming that we're still going lower. However, and again, we were also in the midst of coming from an overbought price action. But again, one key thing is the EMAs. They were not crossed. We had still bullish EMA, which literally made me not take this trade. So I waited, right? And we also had another one right here. However, we didn't get another break of structure. So I was just observing price because again, EMAs didn't cross right here, right? So if we show you no cross of the EMA, so therefore there wasn't a confirmation for me to take the trade. I was following my trading plan step by step. We did have another fair value gap, but we didn't get a break of structure on this time. We were kind of getting across the EMAs, but we didn't get a break of structure. So then we're just playing the waiting game at this point. Again, we had another tap into this huge fair value gap, right? I believe this was news. But we didn't get a candle closure, body closure out of this fair value gap. We did get a break of structure again, but we didn't get across the EMAs again. So still waiting. And I believe EMAs crossing are more important than anything else. Well, obviously followed by a break of structure, right? But break of structure and cross the EMAs is just like beautiful confirmation. That's what you want to see, right? So therefore, what do we get? We got another sweep of liquidity, right? So scale out to the 5 minute. And if we, right, scale out to 5, we got another sweep of liquidity, right? The 5 minute highs. Um, and I'm just watching price, right? Again, we got a sweep of liquidity. We got a bearish candle off of the sweep of liquidity. And what am I looking at, right? So we got that sweep of liquidity. bearish price action, and we got this fair value gap right here. Cross of the EMA is right there. At that point, we know that we are, the blue one signifies short-term bearish trend, or short-term trend, and then the red is the long-term trend. So therefore, we see that the cross, right, the short-term is also aligning with the long-term. So what am I looking for? At this point, I'm looking for a fair value gap, which we got right here, and I'm just waiting for a tap of the fair value gap. Because of how price was looking like, so you can see, we had another small fair value gap right here. We didn't get exactly a tap into it. We did get a cross, and then we also had this order block, because again, this was a sweep of liquidity, right? We got to tap into this order block, and then huge rejection, not once but twice. Again, because of how price action was looking, how so much bearish order flow was coming through, and how strong these rejections were. I was okay with not having it fully tap into this fair value gap, this small fair value gap, because again, we were within this order block. It tapped into it, strongly rejected not once but twice. As soon as I was seeing the second rejection right here, I saw the first one. I was like, okay, that's a good sign. I seen the tap into it, saw it slowly coming back down. I entered because again, I was confident because we had crossed the EMAs, not overbought or oversold conditions. Sorry, not oversold conditions. And then we were also within a tap and rejection of a order block. So once I seen that, I was like, okay, boom, I entered. Worst case, I got stopped out up here in this fair value gap. And what was I aiming for? Nothing crazy. 2-1. Right at the end of these initial um high buy side liquidity, right, from the high time frames, which were also 1 minute liquidity zones, right, as you can see. And there was a fair value gap right here on the 1 minute, which made me just want to take it from right there. And again, if we scale out to the 5 minute, we can see that it was also a fair value gap right here from the 5 minute fair value gap. So it's what I was really aiming for. Didn't want to risk it. Didn't really want to aim for this all the way down here, because I felt like that was a good enough move because of how bullish this price action was right here. It seemed like it was too strong for it to continue even going any further down. But yeah. But with that being said, like, beautiful trade. Again, I kind of followed my trading plan kind of to the T, just because we didn't really tap into a fair value gap. I was just basically going off of the EMAs crossing and how strong the bearish order flow was, and we kind of took it off this rejection of order block, right? Because of how strong the rejections were, I was convinced with also the rejection of the order block, the rejection of the EMAs right here as well, and the fact that we had two, not one but two, fair value gaps that could be used as safety, was perfect, right? I mean, if you were looking, again, another trade you could have taken was if you were looking for the buy side right here, right? This fair value gap, Jesus, sorry. This fair value gap right here. And then what are we waiting for? Again, just the break structure. So would have been like right here. Cross of the EMAs, perfect. So enter right here, stops right underneath here. So something like, Jesus. Something like this. And what are you aiming for? Your high time frame. Simple. Got your cross of the EMAs, rejection of the fair value gap, and boom. 2.781. Beautiful. A lot of people don't understand about ICT concepts is that it can work in either way. So if I was wrong on my bias for the day, if I didn't really score, what you could do is, okay, based on my trade idea, my stops are right here. This is where my trade idea would be invalidated. If I get stopped out, then I know my bias is wrong. So therefore, you would switch it, right? And look for a better stopping point where it could be or like a more safe entry, right, to the opposite side, which in this case was right here. So if I would have got stopped out, right, my entry point would have get, like, let's say if I was entered, I don't know, if I entered like somewhere around here and I got stopped out and I seen that we're going the opposite way, I'm looking for another entry to the opposite side because my bias was completely wrong for the day. So therefore, my bias is the opposite, right? Because again, there's only two things: it's either buy or sell. Don't overcomplicate it. Obviously, there's gonna be days where it's top central, but if that's the case, then all right, two trades, no more than that. But again, if I see, okay, I get stopped out somewhere around here, and I'm like, okay, hold on, let me wait and analyze. I see that there's a fair value gap. Okay, I could put my stops right at the end of this fair value gap candle, right? And we're waiting for, okay, break a structure, cross to the EMAs, perfect, boom, not overbought conditions, perfect. I enter right here. What am I aiming for? Just a straight, simple next high time frame target, which is this, right? And as you can see, we literally came even higher. You could have got literally a 3-to-1 if you really wanted to. So just a thing to keep in mind. I mean, you can go days um like this, if just an example, like if you have a day where your bias is incorrect, you can always just flip it. That's the beautiful thing about ICT concepts, that it can work both ways. All you got to do is find a place to put your stops at, or a safe stop, I guess you can say, is a safe entry type of thing. I don't explain it. um just a thing that I've noticed. But yeah, just a beautiful trade. That the things I could have done better. I guess I could say I just really enjoyed how I took my trade. Obviously, I could have waited for a fair value gap entry. If I would have done that, I probably wouldn't have gotten an entry in general, because if I'm being honest, I trade reversal, so my sweep of liquidity, they would have been nothing because we would have not been going down. Um, we got right here, but this doesn't break structure, so I'm not taking that. Um, yeah, so I mean, probably right here, I guess. But I would probably got stopped out. I mean, either way, no, that's at 11. I'm not even on the charts at that time. Yeah, so I mean, I probably wouldn't even have like taken a trade. If I didn't take this trade, I wouldn't have taken a trade. And the only reason I took it is because we had this order block right here and a strong, strong rejection. And the EMAs were crossed. That was my EMAs was my um confirmations. The order block and the rejection was just a cherry on top. Um, this was close enough for me to consider it, I guess, to tap into the fair value gap. I guess just rejection, huge of it. So solid trade. Wait, I could have waited for the tap into the fair value gap, but if I would have waited for that, wouldn't have taken a trade in general. So I think I executed well. I adapted well to market conditions, like based on how this order flow was coming through. Um, and yeah, so that's it for my trade today, or trade from yesterday, I should say. And yeah, so I should can I clear? There we go. But yeah, with that being said, guys, thank you for tuning in. Beautiful start to the year. What is it, like our second trade of the year, and another W. Hopefully we can keep it going. Let's see how long we keep the win streak going. Um, um, and again, hopefully this year, for you traders out there, hopefully this year is the year that you find, if you're not profitability. If you're profitable, then a lot of financial success. Um, Trading is a beautiful, beautiful skill to learn. It really tests you. It really requires a lot of self-diagnosis and self-awareness, and a lot of discipline and psychology. I think there's more psychology rather than skill, because any strategy can work. Your psychology's got to be intact to trust yourself and your strategy. Um, But yeah, with this being said, guys, appreciate every single one of you who tune in, watch my videos. And I'll catch you on the next trade recap. Peace.